Hello traders out there in Traderland, my name's Des Woodruff here at Grok Trade. It's Wednesday, April 6th, 2011. Markets found bullish territory today. We have the Dow up 0.27%, the S&P down 0.2%, 0.3% on the Nasdaq, Russell 0.1%. Russell's really lagging here. They were leading, now lagging. Banks did exceptionally well, beating out the markets quite a bit. Volatility index dropping by 3%. So, far as the market internals and the breadth of the indices, a lot of strength out there today. Although we ended at dojis, and if you look at this here, let me look at this first. You have crude oil up yet again. Transportation lagging. You have the US dollar down and gold up a bit here. But check out these dojis. We get a whole fistful of them at the top of this extended leg. We're extended by anybody's stretch of imagination. But what's interesting here is we're starting to build this high base formation. Not too shabby. So we have resistance right here at the 1340 area, and we have a little support down below these shadows. Puts us around 1325 to 1328 range. But we are building some support. The longer, these are called flying plateaus, but this is a short little mini-me one. We need this to develop a little longer, build a little more strength, and then stocks can leap from that. However, if you look at the bigger time frames, such as the weekly or especially the monthly, things look dire out there, like we could be turning around in the markets. However, do we hear thunder in the distance? Maybe, but we'll play that when we see it. This is a great time to actually be sitting on your hands because the markets are not making a decisive move up or down. I have some longs going right now. I had longs going into this morning, and but the choppy market got out of some of them and re-added a couple more. Yeah, so it'd be interesting to see what tomorrow brings. I have a rant. I was talking with a very well-known, prestigious fund, and this fund will go unnamed. And I was talking with one of the owners of it, and these guys have been around a long, long time, and we're going back and forth, and it didn't take long for us to get onto technical analysis, and he wanted to poo-poo technical analysis. His words, not mine. He says, we preach to our clients that technicals are certainly not the way to go. And what ticks me off on that is, you know what, I'll bring it up here. Let's look, I'm just going to go to the diamonds. I'm going to pull up a monthly chart. And in this monthly chart, it's pulling a lot of data. All right. So look at this drop. I mean, I could pull in more data, but right now I'm not going to take the time to do that. But from the 80s, 90s, we made these all-time highs going up to 2000. Well, the buy and hold strategy died when the technology bubble popped and the markets went into a major correction. Every bar here is a month. And a lot of you sat through that, and you know what your 401ks, your IRAs, your SEPs, you know what those accounts did at this time. We get a double bottom, we rally high, breaking through resistance areas. We high base, we pop, pull back, pop, base, pop, pull back, pop, pull back, pop, and then we break down below trend lines again. We start to drop, inverted head and shoulders, crash. What was this? Financial bubble popping. Drops, 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 drops. We rally, and here we are. Now think about this. All the money you had back here at this high, think of that as being 100%. Right now, you are slightly over that. in 2000. So we're past a decade, and you're just now a little higher than this area. In 10 years, you're up a little bit, but are you really? To be quite frank, if you're in mutual funds, you are down money. Why? Because the average mutual fund from my last statistic was lagging the bond markets by around 2.7%. That's the best percentage I could find, by 5.5%. So let's be conservative, just say 3%. If you're in a mutual fund, you held that, you're down 3% on average per year, and then you have to compound that. So now let me ask you, are you up at this moment? No, not up, not at all. And that's not even factoring in inflation. Are you kidding me? So the person back here in 2007 that had, they made some money back, they felt hunky-dory, all is well in the world, this was a fluke, it blows up in their face and we crash and burn. At this moment, we are down money. Most of you are in mutual funds, so you're taking that hit. And then you have inflationary hits that you're taking on that on your capital. So, and when will we ever see those highs, and when will we go higher than those highs? Technically speaking, we are very extended right now on the monthly. We have this monster run. Look at this leg. Take this leg out of it. It's things that drop fast, pop fast. Look at this leg and compare that to all these other legs going back, 10 years. You don't see too many legs that size, do you, before it does a correction? That's what we're seeing right now in the markets. And we're fighting some resistance points. So the fund manager was trying to wave his banner that fundamental analysis and buy and hold is the only way to go. Are you kidding me? It died. Buy and hold died in 2000. And it was confirmed in 2008. To think you can buy and hold, and then that's a long-term strategy. You can't even call it a strategy. Buy and hold is not a strategy. You have to wake up, smell the coffee, educate yourself to know that these technicals tell a tale. It is a footprint. These technicals are what they are. They don't lie. What we have to do is wake up, and we have to look and take ownership of our own capital, because your brokers aren't doing it for you. I had a number of brokers that come in, through training, through our mentorship program, and one of them, 20 years experience, says, Des, for 20 years, it's been the blind leading the blind. They don't teach us this stuff. Another guy, 28 years experience, they're both still active as brokers, 28 years, says, I'm done peddling the lie. The buy and hold strategy just does not work. He was sick. He was sick of having to have to come up with excuses and justify why they're holding on to securities as the market crashes. And, this was too tough for him. As we're bouncing, that's when he came in. But anyway, my point here is you all that watch my videos, you all that are educating yourselves, you have a library of trading books, and especially all of those who have trading mentors, regardless if it's us or not, that's immaterial. If you have a trading mentor, you have done yourself a world of good, and you're on the right track. So stay educated, keep your nose to the grindstone, and make sure you're doing your due diligence and earning your rights to make money out there in the markets. And certainly, if the markets start to tank and nosedive, don't be the average Joe out there and the average broker and the average fund that's doing a buy and hold and just hoping for the markets to bounce back again. Their excuse is buy more since we're low. Averaging down? Are you kidding me? Anyway, there you have it. Thank you for being a part of freetradingvideos.com Incorporated DBA Grok Trade. I'm president and founder, Des Woodruff, signing off. Until next time, safe trading to you.